Welcome back to the channel. For now, let's cover the commodities. Let's start with gold. I have a 4 hours time frame chart. I think I've already discussed this structure to the upside, this channel, this parallel channel. We discussed this before. Gold remains above the weekly fractal resistance 2483. That's a major resistance level. Printing a new historical high. We have a new daily fractal resistance at 2529. A retest of the previous highs, already printed also a new intraday resistance at 2529. Actually 2531, the daily fractal, actually 2529, the intraday resistance. In terms of support levels, we have of course the 2493, the most recent fractal support. I think we discussed this possibility before, to start to unfold into a triangle based on this support level, or this retracement towards this 2493. It looks like a triangle, and I admit the market can trade both ways, both above the resistance, and of course if the price breaks below, it will trigger that it may trigger that the double top that we discussed before. Actually, I posted this eventual double top on Twitter, so if you follow also on Twitter, you should be already familiar with that. So potential triangle, pay attention to the levels, fractal support and resistance levels. If the price breaks above, that may offer a move to the upside. In terms of silver, I think I have already discussed this chart before. Not a lot, but a couple of patterns may start to emerge. So first of all, it starts to unfold into a potential heads and shoulders pattern. So we have a new fractal support at 2906. That's the fractal support, the intraday support level. We have the daily fractal at 2877. So I admit that the clear violation of these levels may trigger a move towards the 200% Fibonacci extension level that converges with the 61.8% Fibonacci retracement level. If the price breaks below the support, it may offer a nice opportunity to guide it lower, even though it remains above support. So until there's no pattern to trade. It can actually print new higher highs and unfold into a 3 drives pattern formation. If that happens, and I believe we have signs of divergence already, and silver keeps offering those signs, but if the price trades higher and keeps offering divergence signals or bearish divergence, we may see a 3 drives pattern formation. So if that unfolds, if the price unfolds into the 3 drives pattern, the default target for that pattern, it's the first lows of the pattern. So we have one first low, point A, the second high, point B, and the third high. Actually, the first high, second high, third high. We expect a move towards the bottom of the pattern. So we wait and see. For now, we are tracking the eventual head and shoulders, as I said before. But do not ignore the potential move to the upside if the price fails to break below and to trigger that specific pattern. So this is gold and silver, and of course do not ignore the possibility to unfold into this, to extend into this golden Fibonacci extension at $30.96, as I discussed earlier this week. So this is gold, silver. Let's also approach copper. And for that, I need to go into a higher time frame. I need to go into a weekly time frame chart to show you not only this structure that the price is holding, but also this eventual false break of these resistance. So we have these previous resistance, previous highs, an attempt to break failed. So if the price ends up breaking below these structure support levels, that may trigger a very strong move to the downside, but we are far away from that to happen. One of the patterns that I want to, or one of the levels that I want to pay attention to, is the potential move to the previous structure support level. It's a very simple approach. Basically, we saw three waves move to the downside, retesting the previous structure resistance. I'm expecting to see a retest of this structure support, even with a three waves structure to the upside or whatever it needs to print. I need to see a retest of this structure in order to search for new retracement or new pullbacks. We can also track that possible move towards the support level with the Fibonacci retracement level, which converges with the 38% Fibonacci level. So we stay above the moving average, as we can see, acting as element of support. So I want to see an approach to the 38% Fibonacci level, and that may offer resistance. The same way the price searches for the previous resistance to form support, I'm expecting to see the same reaction to bring the price lower. I want to see a retest of this trendline support, or let's say not a retest, but a reinforcement, let's say, of this trendline support, and or eventually a violation of this trendline. I will see how the market will behave once we approach this structure again. It may unfold into a 5-wave structure to the downside eventually, but I think it's something is missing here. So I need to see more downside in order to try to understand a bit better what will happen on copper.
Hi, my name is Blake Morrow, president and co-founder of Forex Analytix. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
Then we have also palladium, and I think I shared this pattern before a few months ago. Waiting for these patterns, it may take longer to see the pattern starting to form, but based on the ratios above, we can project a bullish graph pattern at 365. We are far away from those levels. Of course, we have a nice descending wedge now starting to unfold. We pay attention to this structure. Basically, a move below the structure support may trigger a nice swing to the downside. The same way the violation above the wedge should offer an attempt to recover. As we can see, we are also facing previous elements of previous structure resistance, as you can see. So the most recent support facing the previous resistance level. Let me try to show you this. Okay, so basically this zone may act as a level of support. So wait for the breakout of this structure, or to the upside or to the downside, and if the price approaches that golden Fibonacci extension, pay attention to a potential bounce. So now let's go back to the top of my list, and let's start with cocoa. Now finding the golden Fibonacci retracement level. Nothing more to say for now. We're still inside this wedge formation, so basically we are facing the moving average, and we are also facing the 61.8% Fibonacci retracement level, so that may suggest more downside momentum for cocoa. We have also cotton. Let me increase my time frame here to show you the eventual patterns that may start to emerge if the price keeps trading lower. So basically nothing to do at this point. I admit a bounce, eventually searching for these previous levels of support, but ultimately I want to see the price extending to the golden Fibonacci level, basically a retest or an approach to the previous lows, and if that happens I will wait for that bounce. Cotton. Then we have feather, we have also lean hogs, we have also live cattle. Some of those markets I don't trade so often, but I like to try to understand what they are doing. So let's go and discuss a bit of these markets. So basically previous structure support is now under pressure. I see this as a potential three drives pattern to the downside, so I'm waiting for a new lower low just to threat a violation of the previous structure support level. If that happens, it will unfold into a three drives pattern, and as I said before, this time inverted, that pattern should target the top or the first highs in this case, and the first resistance of the pattern. So I will wait for a move towards 250 or 249 after printing a new lower low. Then we have also lean hogs. Let me increase my time frame into a daily and let me change into a candle chart. I posted this chart on Twitter a few moments ago, and as we can see, all the gaps there have been filled, so except two of them. So the one that we are trying to fill now and the one printed above, so which remains let's say unfilled. So we still need to fill those gaps above. So ultimately we will see those gaps being filled, very similar to all the previous ones. But the most important one that we should pay attention to is the one that we are trying now to fill. And in order to fill that gap, we need to trade the 50% Fibonacci retracement level from all this swing to the downside. So I believe we are in a way to fill that gap once again in this market. Now this is one of the markets that I'm very familiar with. Actually, this was my first trade ever. It was on the coffee market back in the summer of 2012. And at this point, and this is not so I feel very comfortable when I approach this market. So basically we have clear signs of divergence once we approach the previous structure high. So basically this calls for a potential pullback. I want to see an extension above the resistance, so I need to see the market trading in divergence, but I need to see the formation of this pattern at the 113% Fibonacci extension, 276, and once that pattern forms, I will wait for the pullback. The pullback should trade at 38% Fibonacci level back to 224.90, so that's the 38% Fib retracement level. And that if that triggers, so if this move starts and if the price corresponds to my expectations, or basically to the expectations of the pattern itself, it may trigger not only a move towards the moving average, but also a move towards one eventual trendline support that may start to unfold. And for that to reinforce that trend line, we need to see a price moving lower. Live cattle bearish shark pattern completed. I think I shared this pattern on some of my previous videos covering some of the commodities. 224% Fibonacci extension, bearish shark pattern completed, 191.62. I do expect a major retracement, a deeper retracement towards the 50% Fibonacci level. Of course, we have also other Fibonacci levels to consider, specifically the 38% Fibonacci level, 147.95. It's a nice price zone to consider partitioning or starting to pocket some money if you are trading those commodities. Natural gas, I've already discussed this before with you, potential or eventual head and shoulders pattern formation, and we need to wait for a clear violation of the resistance. Until there, the market can trade even lower. If that happens, we have already patterns projected. Actually, we can project some patterns below based on the structure and the Fibonacci ratios filled below the neckline. So, but if the price keeps trading lower, we have another pattern that may start to unfold at the golden Fibonacci extension, the bullish crab pattern at 161.37, basically 161.8% Fibonacci extension, 161.37 as a bullish crab pattern completion point. If that happens, I will expect a bounce. If the price approaches these levels of this Fibonacci level, as you can see, we will be trading very close to the previous levels of support. Platinum, another one that I shared this week on Twitter, a potential violation of this ascending channel. So we have this parallel structure, an ascending structure, the price violating the channel, and it's now retesting the lows of the channel. So the previous structure support is now acting as a potential element of resistance. I have targets at 917, so basically a retest of the previous lows, but also the potential reinforcement of this structure support. Bullish shark pattern 917, that's where a bullish shark pattern will complete. Let me try to show you or to paint you that same shark pattern. Golden Fibonacci extension of the last swing high. Sugar breaking resistance level. We had a resistance at $18.92. I admit a retest of these $20.77 after a violation of that resistance. I was trying to track the potential move towards the golden Fibonacci extension level, and it remains a possibility. Let's wait and see how the market will react here, but that remains one of the possibilities on sugar. Basically 1720 previous structure support retested and started to bounce. Daily moving average now pointing at $21.08. So I admit a retest of these highs, as I said, and eventually just searching for that moving average in order to search for moves to the downside. Let's see how the market will react. Another price zone that we can, or another tool that we can use to track the price zone to find the next resistance level, and this may force a new high above the fractal, the 38% Fibonacci level, 21.57. So if somehow the price approaches these levels, I will expect more moves to the downside. Crude oil, already discussed earlier this week, potential double bottom. We are far from completing that pattern. We need to see a clear violation of the resistance level. We are now facing an internal level. Actually, the market rejected the golden Fibonacci level at $75. Nice bounce towards the moving average. Let's wait to see if crude will be capable to break above the resistance, or if it will continue the momentum to the downside and breaking the levels of support. Let's also finish with the Z's futures. Let's start with corn futures. Actually, 88.6% Fibonacci retracement level, bullish pattern completed. We had already completed the bullish butterfly pattern before. I think I called your attention to these patterns and to these levels. So pay attention to a bounce towards the 38% Fibonacci level. That points to 538. That represents something similar to a 49% move from this completion point for corn. We have also soybean now approaching now trading the 78.6, between the 78.6 and the 88.6% Fibonacci level. I have a pattern projected a few points below, actually retesting the previous structure support, so I need to wait for a bit more for that pattern to complete. 808 and $808, the golden Fibonacci extension of the last swing high. That's my level of interest for soybean. The same may happen for oat futures, now facing support, actually rejecting the previous support level. At least it shows some resilience to break lower, but ultimately I will wait for that breakout lower that may favor more downside momentum, and if that happens, of course, I will pay attention later at the golden Fibonacci extension level 162. That's where the bullish crab pattern or the deep crab pattern will complete if the price approaches these levels. For now, it remains, as I said, resilient to break lower. This level of support may also trigger some positioning to the upside. If it keeps holding at the $300, I believe it may trigger some moves to the upside. But let's not forget, we have also a trendline resistance already covering the previous fractals, so that may exert some pressure also to the downside. And to finish, of course, we should not forget wheat. Nothing very specific, but we have a trendline support. We are approaching these levels again. We are inside what we may call an expanding triangle starting to unfold. So I think I missed something here. I need a new swing high. Eventually this level of support may trigger that, that move to the upside. Eventually just to search for another level of resistance, but ultimately I want to see how the price behaves once it approaches this trend line support. If you increase your time frame, you will see you can extend these basically or roughly to these previous lows. You can see there is a major trend line support holding all these shorter to the upside, and eventually the price will be forced to retest or reinforce these levels again. That's all for today. I hope you enjoy, and I hope to see you in the next video, and have a nice trading day.